Why having a good credit score will change your life. Often people don't really think about their credit, or they don't effectively and actively manage their credit, and I can tell you that's a huge mistake for many reasons. The other good news is you can change your credit. It doesn't take that long to change your credit. Some people think they're stuck with bad credit for the next decade. Not true. You can often change it faster than you think. So let's talk about credit. What is it? How do you get it? And what does it mean to you? What is a credit score? Interesting question, most people don't know. A credit score represents how much a bank or lender can trust someone to pay back their debts. Having a high credit score gives you access to unique financial opportunities not available to most people. When you have good credit, it opens a lot of doors. And when you have bad credit, it closes a lot of doors. And you want to make sure that you're in a position to take advantage of all the opportunities out there, and you can't do that with bad credit. How credit is calculated. You know what? Most people have no idea, and even the experts struggle to tell you. It's kind of a black box, but there are some things that we know. A credit score is calculated by sophisticated computer software that looks at payment history, credit utilization, length of credit history, types of credit used, and recent credit inquiries. So what do you want to do? You want to address all of those things in a systematic way to make sure that you're building credit, improving your credit, and sustaining good credit. Benefit number one is a better mortgage. This is huge. Bumping your credit score from the fair to very good range, which is above 740, can easily save you $40,000 or more over time on a typical mortgage. Also, loans are more likely to be approved quickly with a high credit score. All of these things happen for you, and often people underestimate the difference between the interest rate and the terms on something like a mortgage and how that adds up over time. If you look at how much you spend over a 30-year mortgage when you have a better credit score versus a worse credit score, the numbers are huge. So think about it now so that when you have a mortgage in the future, or when you can refinance your mortgage, that the credit score allows you to get a better payment and lower interest. I have a personal story about this. When my wife Mimi and I were first together, she had horrible credit because when she was in school, she was running money up on credit cards, she couldn't afford rent, she was bouncing checks, and so she had terrible credit. So when we went to buy her first car, and I remember it was a Honda CRX, we bought the car, but when we got the interest rate, they financed it through the dealership, it was something like 18% interest on the car. And I saw that and I was like, oh my goodness, we need to pay this car off as fast as possible. That was because of her terrible credit. Now fast forward now, we both have amazing credit, and the shocking thing to me, and I'll share the secret with you, my wife has better credit than me. Her scores are slightly higher than mine, and it seems like that's a travesty because I remember when we first met how she had terrible credit. So that punished us in our first purchase. Make sure this doesn't punish you. Benefit number two is access to credit. When you go through hard times in your business, where you go through hard times in your personal life, having access to credit and to money when you need it most is really important, and you can only do that through having a great credit score. Having a higher credit score allows you to not only get premium credit cards, but it also gives you access to lines of credit and even jumbo loans that lenders won't consider for anyone else with a lower score. This allows you to have access to loans and to money. This allows you to get buffers of lines of credit. So if you ever have an emergency, you can pull on your line of credit. You can't do that with a low credit score. Benefit number three is lower premiums. Now you might be thinking lower premiums on your mortgage, but I'm not talking about that. I'm talking about other ways you get benefits from having great credit. Having a very good credit score can cut your car insurance in half compared to someone with a poor credit rating. You can also get better quotes for life, renter, home, and travel insurance. So often people just think it's taking a loan from a bank. No, there are many different areas you end up paying more because you have poor credit. Sometimes I even know employers that will want to know your credit rating before they hire you. So making sure you have high credit has a multitude of advantages that you can benefit from if you have good credit. Sometimes I see people see a loan or something they can buy for money that they can afford, but they're paying an insanely high interest rate. Just because you can afford it doesn't mean that that's good for you. And maybe it's better to repair your credit score first and then make that purchase. So credit score has a lot to do with your future and the hundreds of thousands of dollars you might spend unnecessarily by not having good credit. So don't worry about whether you can afford the payment or not. Worry about whether you're getting the best deal possible. And if not, why not? If it's your credit, fix your credit. How to raise your credit score? Well, that's the magic. The first thing to know is your credit score will change. It changes over time. And you can change it as fast as sometimes 3 to 6 months, depending on what the problem is with your credit score. So how can you do that? The best way to raise your credit score depends on your personal financial situation, but here are some general tips. Pay all your bills on time. Do use a credit card. And by the way, if you have multiple credit cards, share the love. Often people fall in love with one credit card, and that's not smart. You want to be able to spread the love between multiple credit cards because that's better for your credit score. And do not cancel your old credit card. I'm going to cover that in 1 second. Keep your credit card balance below 30%. That means at any time during the month, never let your credit card balance go above 30% of the credit limit. Now you might say, well, I pay off my credit card every month in full. Why should I care about that? Because it hurts your credit. So if you go more than 50% of the available credit on a credit card at any time during the month, that hurts your credit. So you say, well, then how in the world do I do that? You make more than one payment each month. So with my wife and I, we have a trigger so that when it gets to 25% of our credit limit on any credit card, it triggers an email or a text so then we know to make a payment. So some months we might make 3 payments on our credit card, but we never let it go at any point during the month above that 30% limit. And if you do that, you're gonna notice your credit score is gonna go up over time. Keep old credit accounts open. An old credit card is critical to your good credit, and often people don't like the terms of their own credit card. Keep it open, charge on it from time to time so that that card stays alive, because that age within your credit history is big on supporting a high credit score. And then limit hard credit inquiries. So if you're at a store, you're shopping, and they say, hey, would you like to apply for our credit card for the store? We'll give you a 10 or a 20% discount today. Do not say yes, because you want to limit those hard credit inquiries because that hurts your credit. And remember, you only want probably 3 or 4 to at the most maybe 7 credit cards that you share the wealth that you're using on a consistent basis. And if you have a card from a store that you're only going to shop at once a year or twice a year, that's not a good use of that credit card. Those are some of the things that you can do to raise your credit score, and I would encourage you to do all of those things. It also is important to do some pre-planning. So if you say, hey, I think I'm gonna buy a house in a year, when should you start thinking of your credit? That's right, today. Start thinking of your credit today. Think about, am I using multiple credit cards? Am I keeping my balance below 30% at all times during the month? Am I keeping my old credit cards? Do I have a mix between installment and revolving credit? So installment credit is things like your car payment or your house payment. Revolving credit are things like your credit cards, and it's good to have a mix of both of those things. But planning ahead, so if you think about when you're gonna need a mortgage or when you're gonna need a loan, think about that as the job interview. So you get to prepare for the job interview, and on the day of the job interview, you're wearing your best clothes, you have your best look on your face, you have your best attitude, and that's what you want to do. You want to look at your best the day they're deciding whether you get a loan under good terms. And to do that, you want to think months in advance. Now, if you have credit that's been damaged in a way that it might take you years, the sooner you start, the sooner you'll see improvements, because it's not like it's going to take you 5 years to improve your credit. You can improve your credit gradually over time. And the sooner you start, the sooner you're going to get to a good credit result where you can reap all of these benefits. Thank you for watching this video. I hope you learned some things, and I look forward to seeing you on the next video.